Good morning, traders. It is Tuesday, 8:01 a.m. Chicago time on May 5th, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Fair amount of news overnight. The Greek situation again on the front burner in Europe. The IMF threatened to cut off the lifeline that is provided for lending to Greece unless European partners write off large volumes of the country's sovereign debt. So IMF is putting a squeeze on this. There are new negotiations, but really they're not getting anywhere. Overnight, the Reserve Bank of Australia cuts key rates by 25 basis points, but hints of moving towards a neutral bias. Also, the Shanghai Composite takes a 3% hit. It takes a 3% hit due to rumors going around that some Chinese brokers are raising margin trading requirements for equities. This, of course, is likely to push selling into the market with those accounts that are on the edge. It's the allergy season. HSBC announced overnight, you'll see it on the overnight chart, beating by far its expected earnings, caused a pop on the overnight to 21.1175 in the ES, and then right after it, as if to clobber it back to where it was, the UK construction PMI hits a 22-month low, comes in at 54.2 versus 57.4. Construction PMI still expansionary, it's higher than 50, but again, it's the lowest in almost 2 years. Japanese markets are closed until Thursday for Golden Week still. And then for oil, Libyan oil flows have been halted due to a conflict in the country, continuing conflicts in the country. Oil's edging towards $60. We talked about oil several weeks ago and for the last couple of weeks, and we were looking for a 60, I believe it's 60.66 as the target for this move up, and it continues. The U.S. March trade balance came in at negative 51.4 versus negative 41.7, much worse. Looking ahead at what's coming, at 8:45 Central, just 15 minutes after the open, we're looking for a composite PMI and services PMI, no estimates, priors 57.4, 57.8 respectively. At 9 Central, looking for IBD tip economic optimism for May, looking for 50. At 9 o'clock Central, also ISM non-manufacturing composite, expecting 56. After the close today at 3:35, 4:35 Eastern, we're looking for API crude oil inventories. The prior's 4.2 million. And then there are some speakers earlier. We had the Italian finance minister speaking on banks in the EU. At 11:30 Central, we have the Bank of Canada Deputy Governor Wilkins speaking in Montreal. At 11:45 this morning Central, we're looking for German Finance Minister Schäuble speaks at the Cooperative Bank's reception. Not expecting much there. Again, fairly quiet trade, fairly quiet week. The market's already received the information it needed from the Fed last week, which is, a holding pattern essentially. And we have non-farm payrolls at the end of this week. So things are on hold. There's no real incentive for bigger players to get in and out of the market. Let's take a look at what we did yesterday and go over those details. Yesterday, there we go. So yesterday we had an open auction out of range. You can see here we left the prior day's range behind, 2102.50 being the high. Week high left behind on Friday, as discussed in yesterday's Trader Bite, with the point of control against the highs. That gives us a high probability of a push through and higher overnight, which we got. and we had an open auction very briefly. There was no drive at the open. There's no test, nothing. So it's an open auction out of range. 2107 quarter to 2105.50 is the opening swing. You can see it very clearly here. Buyers and sellers battling each other. And then an intermediate term player came in and pushed towards the target. Now, the primary hypothesis yesterday was responsive selling back towards 2101.50. We're looking for responsive selling towards 2101.50, a potential for a push through down into the 98 area, but looking for the 96 to hold. And then the expectation was for it to chop, turn around, and target 2112. 2112 as our target for yesterday's session. Did not work at all. Hypo 1 was completely wrong, as it often is. But that means the probabilities for Hypo 2 are much better. So as soon as this started to take off here, Hypo 2, which was a move, initiative move away from the prior day's range, would take effect. 2112 again, still the target. And but the problem with this is that I couldn't find a place to get on. It happened. There was some decent volume going through the tape, lifting the tape, and I just didn't want to buy a breakout knowing that there's a gap beneath us. So nothing happened there. Looks like the intermediate term player finished. So we had the impulsive move, the extension move, finished at 2115, a double top, IB high, or double top high here. Pretty small but still significant. And then the market, and then the intermediate term player stepped away, leaving this market to short-term traders, and you could see that the session was just terribly choppy all throughout. A very balanced profile. The key thing to take from yesterday is that the IB was unbroken for the session. The occurrence of an unbroken IB is 3% over the last 1,400 days sampled. So that's that does not give us a 100% confidence interval. For those who speak statistics or confidence level, but it's fairly significant. And yesterday was one of those days. Now, going back in time and looking at days after a day where the IB is unbroken, remember 97% of the time we expect the IB to be broken by at least a tick one way or another. Yesterday did not do so. The next day had a fair amount of volatility in it, and that's where the overnight session comes in. So currently the market's trading at 2102. Let's look at the overnight session. So the continuous drift from the prior session here continued to drift down. There's the HSBC number right there, pushing up to 2117.75, closing the point of control overnight. That point of control still naked on the day session, but basically the overnight high is right up against the point of control. Again, this is not a random occurrence. And then the UK construction PMI came in and took all of that back, took us back to the scene of the crime, and then the auction from earlier continued. You can almost erase what happened there. The auction from earlier continued. A weak high was put in here at 2109, weak local high, but then the sellers stepped right in, right on the trade balance number. We started to see some selling into the low for the session, 2101 quarter. The 21, this from the Friday, Sunday night session, we talked about 2103.50 to 2102.50 being an LVN here. Looking for this to bounce a little bit. The expectation this morning is that Responsive buyers step back in. I'm looking for resistance in the 2105, 2106 area, but I'm expecting some repair to take place. There's a magnet here at 2101.50. Remember this naked point of control and close. We took it out by a tick overnight. So I'm looking for responsive buying and then for it to chop around and potentially turn around and sell. I want to show you some longer term structures now that we're in the new month. This is May right here so far. You can see the gap here beneath us that we're filling in as we speak, and the weakness below. So we have some weakness at 95, 96 even with the LVN, and there's a gap zone that we're trading currently. But let's look at April. So if we look at February, had the widest range in a long time, and February captured pretty much the entire balance zone, and we've been stuck in that balance zone for some time, including now. March traded inside of February, with March finishing right in the middle distribution here. The cutoff for that is around 55.50 and 75.50. That's where that 76.75 key area comes from. And then April, what happened was we traded a lot on the upside, but we built an HVN right on top of the 75-76 area. We filled this area in. What was unfair became fair for April, but we still finished in the middle distribution. So we finished in the middle distribution. We finished the middle distribution right here, and then put in the new high in May, is trading on the upper distribution still. It's important to note on your charts this 83 quarter area, this LVN right here. It's important to note it as the over underline. Getting through that 83 quarter means we check the prior month's close, and then the point of control again at 2075, 2076. So as long as we hold the buyers hold the 83 quarter, we're likely to continue to be stuck in this upper bounds from April, and we're likely to take out this all-time high. If we push through, which is more likely because the market's just not rotating at all. There's very little price discovery going on. The higher time frame institutions and so forth are not hedging, are not coming in and out of the market. It seems we don't see any participation there. So we're in a holding pattern. For the market to restart its price discovery, or to discover better prices, or to look for buyers, it has to bid prices down. And so the first target for that is 83 and a quarter. That's going to come into play, and I'm going to remind you that I told you about this in the near future. And if it does push through 83 quarter, we're looking for 75, 50, 76, and then expecting it to chop here for a few days. If it cannot find a good bid there, or good buyers there, then the LVN becomes the next target lower. That's just basic auction theory, basic price discovery process in play. But it's good to see how we've played out over the months, and you can see that a lot of action December 2014, huge amount of action in October 2014. We had an inside month January, we expanded February, inside month March, expanded higher on April. This is expected to be somewhat of an inside month, also expecting it to be a pretty slow trade throughout the month. Especially with the Fed not making a move. So, primary hypo for today, a little responsive buying met with resistance in the 2106 area. If it does recapture yesterday's range and holds on to it and gets into value, then that idea gets thrown out, and then we're looking for a long into the 2111.50, 2112 area. If we do see resistance on 2106, then we're looking for it to rotate back down and push down through, and the main target below becomes 95 and a quarter. 95 and a quarter is key for the long term here. It is your point of control, your MC point of control, still 95.50. And the market's been attracted to it several times. We've played this level many times. It was the FOMC low. and that would be the next area to test in today's target on the downside. Here it is, the key monthly LVN at 83 and a quarter, marked on the chart. I suggest you mark it. Let's switch gears, look at crude oil, the current favorite product here. Crude oil, back about 3 weeks ago, I started talking about a corrective pattern and the expectation for 59 to be tested, and we did do that. And then it consolidated, and then I said yet again, we are looking for this W pattern to be broken on the upside, and we're looking for 60, 66 right here, 60, 66, which is the MC point of control, to be tested, and that's what I'm looking for today. So let's that composite comes from way back. I'd have to switch to a 60-minute. Let's switch to a 60-minute for a second to see where that comes from. There's a lot of room on the upside, by the way, up to 80. As I was studying this last night, a very, very clear drop on crude oil all the way up to 80. So let's look at that for a second. This is crude oil daily, and it seems like a mishmash of information, but just follow the general pattern here. And you can see that we broke lower very quickly and are now trading in this balance zone that's outlined by the 64 to 58, with the point of control for this balance zone being 60, 66, which is our current target. And but if you look at where it came from on this drop, and you can see here a double bottom at 80, this would be the big target up above if we continue to drift higher. We've had our impulsive move, we've had our continuation expansion move, and we're in a corrective move, and there's a pretty decent potential to continue higher as prices continue to advertise higher to find those sellers. It seems like sellers have run for the woods right now. But overall, crude's trading beautifully. It's auctioning in a very clear way, in my opinion. It has moved out of the lower balance. It's moved out of the larger balance in this area, and is testing the next balance up, which is this box right here, this red outline box, with the point of control of 60-66. So crude played out just as expected, just as discussed a few weeks ago. Let's take a quick look at the European markets. The European markets have been balancing for a fair amount of time. We talked about the market rolling over and coming back into this 3660 area, and then trading in this 3630 area, and it came back to the point of control from above. You can see this point of control in black, and excuse me, and traded around it quite a bit. This is the expected behavior when you're back in the point of control. Chop, 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 chop. It had a breakout higher, and then once it failed lower, it has not recovered. So the expectation is for a test of 36.30 from below. It got to 36.20, missed it by 10 ticks, and is holding steady with the LVN at 35.21 tested right here to the tick, 35.21, the MC LVN right there. And it's holding. It looks like it's got further down to go. The next balance zone has a point of control of 34.98, which is also a naked point of control, and that's the next target down. It looks like it's likely to head that way over the next week or so. 34.98 in the Euro stocks. Now, that's all I had for you for this morning. I've talked quite a while. Hopefully that gives you a broad perspective of how I'm approaching the markets and how the auction process works and why it's important to learn, or at least consider it as part of your trading. It is not a system, but it's a very, very strong way to look at the market, and it gives you the strong hand once you put on your trades, because you understand what areas are important, what areas are likely to be choppy, and then you can adjust your entry and your approach based on that. If you have any questions, as always, futurestrader71.com/contact. The glossary is on the video and then also on the site. There's a video archive. I'd strongly suggest you have a look at the video archive and look at the old videos. I cover a lot of this material in depth, so a lot of your questions will be answered there. Good luck today, and I'll catch you tomorrow. Bye.